Welcome investors to the 40 Finance channel. My name's Jeff Beers. Today I'm going to talk a little bit about Intel stock, who just had their Q3 earnings report. If you follow the chip sector at all, you know Intel's had some struggles this year. AMD and NVIDIA have been sort of the hot items for 2020. And Intel certainly had their share of critics in 2020. But I'm going to look at Intel strictly from a stock investing perspective, okay? I'm not going to compare chips and nanometers and all those things. We'll talk a little bit about it. But let's just really look at this one as an investment and see, is Intel stock a buy for the long term here at $48 after their Q3 earnings. Reminder, as always, my stock picks and projections are just my opinion for your entertainment. Please make sure you do your research and due diligence before investing in any stock. Now, if you do like stock market analysis and going deep on stocks like Intel and others, please subscribe to the 40 Finance channel. Thank you to everybody who's supported the channel so far. It really makes a big difference in the growth of the channel when you subscribe and hit the like button. So I appreciate it if you help in that way. And if you're interested in hearing more from the 40 Finance channel, you can sign up for my email list in the description. I'll also send you my 15-minute stock analysis guide with tons of free tips and resources you can use to research your favorite stocks. All right, so looking backwards for a second, if you missed the headlines, Intel did come out with their recent Q3 results. And basically, the reaction was kind of mediocre, and ultimately the stock dipped 10%, perhaps even more as we drag into next week. We'll have to see. But the short of it all is that they had some weakness in the data center earnings, and PC earnings were kind of flat, I think just up like 1%. On the data center side, this one gets all the attention for being down, but they explained it as, a lot of purchases in data center across government, education, enterprise type businesses have already been made in the front half of the year. And with COVID and all the things going on, they expected some softness in Q3. I don't know if they expected that level, but that's kind of what happened there. Now, in my opinion, one of the bigger reasons that Intel probably dropped is because they didn't talk too much about the future, and that's what we're all focused on right now. They did make some comments reaffirming that, they'll likely outsource some of their 7-nanometer chip production. But at the end of the day, they pushed a lot of the future news, so to speak, or the looking ahead stuff for their investor day, which will happen, at the close of Q4. I don't know that there's a date on that one yet. That's going to be the big one. So right off the bat, before we even dig into the numbers, I would say that mildly disappointing on Q3, that in this era of strong PC sales, etc., Intel didn't hit. However, I think that some of this you have to hold on for a second if you're interested in Intel or if you own Intel, to see what the investor day is going to bring, because it's all about the future right now with this particular stock. And it's a long future, right? So we're looking to figure out what they're going to do long term, how they're going to do it. And then furthermore, you're going to have to wait for it to happen. So that's where it gets a little dicey right now with Intel. All right, stock price today before the close. This is on Friday, right before the close. We're at 48.06. And you can't help but notice the chart off to the right. These are the two dips from the past 2 quarters, okay? So basically kind of plodding along there at 60. Give or take July 22nd or something like that. They came out with a Q2 report. Boom, it sank down to the high 40s. Then it kind of ebbed its way up heading into Q3 earnings. I just talked about that. There wasn't too much spectacular in there. And so you dropped another bit down again to the high 40s. Now, from an investing standpoint on this stock, there's a lot of positive signs for Intel as a stock. Number one, you see this PE ratio, 882. Obviously, in today's world, that's pretty crazy for a company with a market cap of $204 billion that their PE is under 10. So that's a bonus. EPS there, this is a profitable company, last 12 months of 544. And then, of course, there's the dividend, which you're not really going to get a dividend like this and too many other of the up-and-coming chip names. So 2.45% out of today's price. So all that stuff you have to keep in mind, particularly if you have a value side to your investment strategy like I do. All right, taking a quick look at how the analysts came out after the earnings on tip ranks. These are all 4 or 5-star analysts. You can see it's mostly hold. You got a few sells in here, but basically 3 buys and 3 sells. The rest are holds. Most folks coming in that $50 to $55 mark, I guess you could say. That's just eyeball math for me. So, this is probably where I land myself internally. I do not currently own Intel, but I've been watching it for the past few months because I think that as soon as some big news comes out, or frankly, any news that aims towards progress, I think this one starts to rip again. So I kind of agree with the analyst here as far as hold. If I owned Intel, I would be holding, potentially managing my cost basis down to take advantage of this dip. But I'm not buying a new position here yet. All right, so on the value side of things, Intel stockholders have certainly nothing to be ashamed of. And as much as AMD and NVIDIA are kind of dominating the headlines right now, this company is massive, and it's not always a competition between stocks, right? At the end of the day, if you own Intel or you own AMD and you just own them like on a standalone basis, you're not necessarily competing with AMD stock, right? And you are trying to get a return on your investment that follows your risk tolerance and all the other reasons that you jump in a company, right? And if you look at Intel stock, you're going to have a hard time picking like a regular broad company metric and poke a hole in what Intel's doing, right? At the top of this screen, which is from a Morningstar report, in 2015, they brought in over $55 billion. And every year that has grown. It looks like 2018 to 2019 was a little thin, but they still brought in an additional $1 billion. And in the trailing 12 months of this year, they're at 79 billion. You scroll down to net margin, which is, just one that I happen to highlight. And you got a company here in 2019 that had a net margin of 29%. That's pretty awesome. Trailing 12 months of 30%. So they're not nickel and diming it. The things that they make and sell, are bringing in margins of 30%. If this is a lemonade stand and you're making $78.9 billion on a 30% margin, that's pretty impressive if you ask me. So there's a lot of good stuff going on with Intel. It's just trying to read through the weeds of comparing it to other people. Looking off to the growth per share, which is in the bottom left, revenue growth percentage. So you see that we're stalling out here in 1 year. You got 1.6% growth. 3 years is 6.6, 5, and then 10 that you can see here at 5% and 7%. If you go down 2 lines to the earnings percentage, right? So EPS growth, I guess you could say. 1 year, you're going to get 5%. But then over the 3 year, you're looking at 30%, 5 year at 15%, and 10 year at 20%. Now, 10 years, I wouldn't even know how they calculate it. Frankly, 5 years is hard enough. But I think in the 3 to 5 year stretch, what I'm seeing here out of Intel is definitely better years projected than they're having now. And I see that earnings per share have the opportunity to do even better than the revenue. So obviously, you're going to get into some terms of scale and profitability with a company this big that actually where you can see more profits come in on the same amount of sales. And then bottom line there, stock total return, 1 year, you got 6.1% projected, 3 year, 12%, and 5 year, 11%. So this is not a stock that's expected to go down for the rest of its life and end up at zero and go bankrupt, okay? That's not what we're talking about. See a lot of heated arguments between Intel and AMD on different forums, the technical ones especially. That's why, in this particular presentation, we're talking about the stock of Intel because I do not want to talk to people fighting about computer chip technology and what audience it serves, right? All right, so bottom line for me on Intel after this Q3 earnings, look, they're the market leader. That's so important. And I think a lot of people overlook that because, AMD and NVIDIA are on this hot streak and things are starting to get a little cocky here. At the end of the day, make sure you put it on the board that Intel brought in $79 billion over the trailing 12 months, right? Don't know what AMD did. I want to say it's between 7 and 10 billion over the last 12 months. The bottom line is, if AMD was a company within Intel, they could fall off of the entire company and Intel would still have, $68 billion of revenue. So it's not apples to apples in the stock world. As much as people want to compare like gaming chips and data center chips and make certain assessments, in the stock world, the rules are a little bit different. AMD has a bright future and so does NVIDIA, and they will likely grow. But when you're looking at Intel from a stock perspective, as the market leader in terms of revenue, you have a lot of things you can buy, right? You can buy smaller companies. You can buy research and development. You can move a lot of things around. Now, when you're this big, that stuff doesn't happen overnight. But for the purposes of long-term investing, we don't need it to be done overnight, right? So that's important to keep in mind. I would say point number 2 here, some hope. So that's me saying I have some hope that Intel, that their annual meeting, they're going to come out with some sort of comprehensive plan. I think that's important, and I think that's what they're missing right now. AMD has done a good job of communicating how they're going to stack their business and what's happening. And Intel hasn't really done that. They've just shared bits and pieces of information. So I really hope that Intel's annual meeting this year really comes out and just lays it out, say, hey, here's where we're at. These are the categories we're going to fight for. These are the units that we're selling off. They sold off a unit this week, I think, for flash memory. I don't remember. But they sold a business line for $9 or $10 billion, and I thought that was great news. Point number 3 on here is simple. This is a long-term stock with a dividend, okay? The game on Intel, investing with Intel, is a little bit different than the game with AMD. It is 10, 20 years of performance out of a stock at an expected clip, plus dividend, either reinvesting or using that money for cash. So the key with a value stock like this, trading at a PE of whatever it was, 8 or 9, is that that in a market dip or a sector dip, which happens, by the way, all the time in the chip sector, PC sales dry up a little bit, consumer credit goes down. Dude, chip sector goes down. Just go look at NVIDIA, okay? If you're super high on AMD and NVIDIA right now and you think that they're bulletproof, just know that the chip sector gets hit hard in certain years and everybody goes down. But when you're at this level where you are with Intel, the impact's not going to be as bad because your P is already so low and your revenue is already so hot. And my last point for the road, if you're into following chips, I like following the chip sector. I'm not smart enough to understand how it all ties together into data centers and whatnot. But I personally think that the chip sector is a lot of fun to watch, and the sort of arms race for new technology, whatnot. So if you're like me, instead maybe of jumping into Intel or AMD, you might think about the QQQ because you're going to have Intel, AMD, and NVIDIA in it. So if you're a new investor, then you're trying to think of what to do with any one of these chip stocks. I would look at the QQQ because you're going to get all the chip stocks that matter, plus, some other things across the market. So that's just an idea or a tip for the day. All right, guys, hope you enjoyed this look at Intel. I feel good for the long term. I think that this is still a solid investment. And at this point right now, you are protected against overinflated valuation like we're seeing across the market. So it's not a bad play. I personally would not buy it. I would wait until the annual comes out and we kind of see a plan of where this company thinks it's going to go before you jump in, because you might still get that price cheaper than $48 today. All right, thanks for watching. Please give me a like and subscribe if you enjoyed this content. We'll see you on the next video.